Bankers and business leaders are shifting more attention towards Saudi Arabia's neighbors in the Gulf, such as Qatar and UAE, as the kingdom grapples with lower oil prices and a deep deficit. That is the subject of today's Big Take. So for more, let's get out to Bloomberg's Matthew Merton in Riyadh. Really interesting deep dive into, I would say, the developments over the last couple of months, years even, Matthew. But then also coming on the heels of President Trump's trip around the GCC. And you point out in this piece that Saudi Arabia perhaps is a little different in terms of financial ass versus, say, Qatar and Abu Dhabi, because it has transitioned from being a net exporter of capital to a net importer of capital. Tell us more.
Yeah, good morning, Jamana. I mean, exactly as you say. I mean, sort of very simply, Saudi Arabia, just the sheer extent of this domestic spending program that's been launched under the Crown Prince, Prince Mohammed bin Salman, means that Saudi Arabia, although it has all of this huge oil resource which has been pumping for decades and earning, tens and hundreds of billions of dollars on, a lot of that is now all being sucked up on domestic spending, which means increasingly that Saudi Arabia actually needs to raise money from outside to bring into the country to invest in Saudi Arabia, which is a very different position from neighbors. I mean, especially this is relevant for Qatar and for Abu Dhabi, where they're smaller economies, they have big hydrocarbon endowments, so they are earning far more money than they can possibly digest in their local economies. And so what this means is that, a few years ago when the PIF was making a big splash and doing all these big investments and seems to be sort of backing every deal that was coming across and, giving $100 billion to SoftBank, everybody was flooding into Saudi Arabia because they thought that it was going to be an easy place to come and raise money. And now what they're finding is that actually what Saudi Arabia wants is quite different from the things that Qatar and Abu Dhabi want. Qatar and Abu Dhabi are much more able to say, we just want to do this deal for financial returns, whereas Saudi wants something quite different from what it's going to do with these sorts of partners.
Yeah, and also, the reason that this is the situation that these countries find themselves in is, of course, the break-even oil price in UAE is significantly lower than it is in Saudi Arabia. And Qatar, of course, have the boon coming from extra gas fields coming online. So that's the perhaps hydrocarbon backdrop to all of this. But how do you think this is going to translate into investment activity into Qatar and into Abu Dhabi in the coming years, Matthew?
Well, I think what we're going to see, and you and I were both in Doha a couple of weeks ago for the Qatar Economic Forum. The Qataris are painting a very bullish picture. They are they're very excited about the opportunities that they see investing into the United States. So the QIA has said that it's going to put $500 billion into investing into the U.S. over the next decade. So, I mean, that means that if you are a global fund manager, Qatar is going to be one of those key places that you're going to want to go to try and raise money for your funds or for your private equity takeovers and all of those sorts of big global deal making. And similarly, in Abu Dhabi, you've got that same dynamic. Both those countries as well, of course, have already invested a lot in the infrastructure that they need domestically. So they don't need to invest as much within their own countries as you do in Saudi Arabia. Saudi's got a very different proposition. It's got 35 million people. It's got a very, very oil-dependent economy. It hasn't invested much in its domestic infrastructure, so it's plowing all of that money back in. And as much as it might do some international deals, it really wants them to have a local angle which play into this plan of diversifying the Saudi economy and developing it and creating jobs.